Global smartphone shipments just hit their lowest Q2 level since 2013, and the reason isn't what you'd expect. It's not a demand collapse, it's a memory supply squeeze because AI data centers are hoarding all the DRAM and NAND. Subscribe to Taiwan Tech Pulse, we bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. Here's what's happening. According to Counterpoint Research, global smartphone shipments fell 11% year-over-year in Q2 2026. That's the worst second quarter in over a decade. And the root cause? Memory suppliers are prioritizing AI data center demand over smartphone components. That means DRAM and NAND prices are up, and OEMs are passing those costs straight to consumers, especially on entry-level and mid-range models. Some brands have cut new launches entirely, others are stretching old model cycles. Shilpi Jain, senior analyst at Counterpoint Research, says memory supply and cost are now the key factors impacting the entire industry, and the effects are reaching end demand. On top of that, Middle East geopolitical tensions pushed oil and transport costs higher. And a global economic slowdown with inflation and weak consumer confidence is compounding the pain. So what does this mean for the big players you actually track? Let's start with Samsung. It grabbed 24% market share in Q2, returning to the top spot. It had the highest year-over-year growth among the top 5, driven by the Galaxy S26 series, especially the Ultra model. Strong performance in India and the Middle East helped, and Samsung's vertical integration gives it a buffer on memory costs. Its AI features are also resonating with buyers. Then there's Apple. It hit a Q2 record with 20% market share, and shipments were up 3% year-over-year. Apple was the only major OEM that didn't raise prices. The iPhone 17 series was the top-selling model globally. But here's the catch: China remains weak despite early 618 promotions. And Apple offered smaller discounts than last year. Memory constraints also affected supply of older iPhone models. Now, for investors watching names like Nvidia and AMD, here's the connection: the same memory supply that's squeezing smartphones is being funneled into AI data centers. Nvidia's H100 and B100 GPUs consume massive amounts of HBM memory, which is tightly linked to the DRAM market. So when memory makers like Samsung and SK Hynix prioritize AI chips, smartphone makers get the leftovers. That's a supply chain reality that directly impacts Apple, Samsung, and every phone brand's margins and product cycles. Xiaomi saw a double-digit shipment decline and now holds 12% share. It mitigated some damage by streamlining its portfolio and offering relaxed retailer financing. And it actually grew in the higher price segment thanks to the Redmi Note 15, Redmi K90, and Mi 17 series. OPPO took 4th place with 11% share, but weak demand in major markets hurt it. Though its A series and Reno series provided some support. Vivo came in 5th with 8% share, facing supply challenges and price adjustments that pushed key models away from their core price bands. Among other names, Google saw shipments up 16% year-over-year, driven by the Pixel 10 and Pixel 10a in mature markets. Huawei managed a 6% increase, thanks to the Mate 80, Nova 15, and Enjoy 90 series. Looking ahead, Counterpoint Research maintains its forecast that full-year 2026 global smartphone shipments will decline roughly 14%. And the memory shortage? It's expected to persist into 2027. So what's the play for OEMs? They'll prioritize value and profitability, cutting low-margin models, adjusting specs and storage mix, and increasing sales of refurbished and older models. The premium market should stay stable, supported by installment plans, ecosystem stickiness, and AI-powered retail experiences. For investors, that means the memory supply chain is the bottleneck to watch, and Taiwan's semiconductor ecosystem is at the center of it all.